In this video, I'll show you the best price action trades that have happened over the last few weeks, and I will show you exactly what to look for in a market and how to find those patterns, because those trades and those signals happen over and over again. And whether you trade Forex, whether you trade Bitcoin, indices, stocks or commodities, those are very, very important patterns, and you'll be able to find those trades and those signals over and over again. So let's get into the charts. So we are starting with the first and really fascinating trade study that happened here over the last few weeks. And let me break this chart down step by step, and we'll see why this is so fascinating. And this happens over and over again. So you can see the market is in a strong uptrend, and we are clearly have been moving higher. One thing that you don't want to see if you're long and the market is in an uptrend, you don't want to see really steep and long consolidations. So if the market is suddenly turning around and making a very deep push against the overall trend direction, that's a sign that there's probably a lot of profit taking going on. A lot of traders who went long here probably had a good amount of profits, and then as the market topped, more and more people realize their profits, and that is contributing to the sell-off. Then what happens afterwards is very interesting, because now we can really nicely follow this buyer and seller dynamic. And suddenly we see a lot of weakness in the market. Here you can see the market is returning here to the previous highs and not immediately breaking through it, but eventually we do break through it. But the breakout here is where it gets really interesting, because the breakout that we're having is a very weak signal. It's also kind of a fake out, right? So when we look at the highs here, we can draw the level, and then you can see here we have some resistance, the first sell-off and then the second time, and then the market tried to break above this area, try to make a trend continuation to confirm and further advance this uptrend, right? But what happens is that the market within the next candle shows a very strong rejection. You can see the next candle is almost an engulfing candle, very large body, very wide wicks, and that is a very strong selling indication. Then afterwards, it's not a complete reversal yet, because you can see this is the last swing low that the market is defending, for now at least. So we have our support here, and this is now going to be the key. What is the market going to do here? We have a little bit of a hint what might come next because of everything that we're seeing here. We have a very weak high, and then here you can see that we have a lower high. So from this point, from the breakout, which seems to then turn into a failed breakout, we are now making lower highs. Let me get rid of this and extend the zone, and you can see this is now an area that is seeming to hold as resistance, and now this push here seems like a failed buying attempt, right? So a lot speaks for more selling to come, but you don't want to be short just yet, because there's still a chance that this is not a complete reversal, and this could still hold very well as support, and we're going to see continuation. However, there is a very high chance we're going to roll over because of all the weakness that we're seeing, and for that we have to create our trading plans. And one thing that we could do is, if you are a breakout trader, you would just wait for the market to clear this area and then get into a breakout trade and just short it right away. Or you wait for the pullback. You would like to see the market get below the level. Ideally also you would like to see a good push away from the level, then a move back into this area, so support turns into resistance, and this is then where you look for shorting opportunities into the downtrend. And those pullback trades, they offer a much better reward to risk ratio, because you are easily able to time your trades very specifically and very targetedly to this support area, get a closer stop, get a better entry price, and therefore also a larger reward to risk ratio. So let's see what the market does and what we have here around this area. So you can see breakout traders are probably going to jump in here at one point, and you see a push further away, which is good. And it is not uncommon to see a retest. Those areas are just so common for retests. I've been trading breakouts and pullbacks for over 10 years. And one of the big problems that I see is break-even stops. A lot of traders, if you get in here on the breakout, right, you go in short, then your stop loss is maybe initially here, but then you move your stop loss to your break-even spot. So here is your break-even target, stop loss, sorry. And everybody will know about this because it's just so obvious. That's how majority of retail traders structure their trades. So it's very common to see a push back into this area. And if you are having problems using a break-even stop, that could be an issue. And that could be the reason, because you are just moving your stop loss too soon at a very obvious area. So let's see if we can get back in here, get the stop run, and then look for a selling opportunity. And you can see we poked through the area, and at this point we seem to be really turning support into resistance. So at this point we can go to a lower time frame, whatever you want to do. We are on the daily. You could go to the 1 hour and look for patterns, look for timing your entries. For example, what do we see on the 1 hour? We have here our little consolidation in this form of whatever this is. Not super clear, but we do have a trend line here to the downside, which is going to help us a lot. We could also probably draw a level in here. There seems to be some agreement on the level. 93, the round number, is somewhere in here. And now on the lower time frame, we can very nicely time our trade, because now we have this entry point. We already know from the higher time frame, the big picture perspective, that we are short, or in a short market rather. And now it seems like we even have this head and shoulder pattern, if you can see it. Let me just draw it and then change the color. Let me find it. Here it is. And we have the head and shoulder, right? Left shoulder, the head at the top, and then the right shoulder. And here, this could be our neckline. So a trading plan now on the lower time frame would be getting short on the breakout here. Let's see if we get something like that. Seems like the right shoulder is still in progress. We see a lot of selling coming in. This is a good sign. We also have a lot of selling here from the distance from the head to the right shoulder, which is very good. We want to see more strength on the bearish moves and not so much strength on the bullish side. And now it's just a waiting game. And at this point, this is probably here or 1 candle later. If this breakout is not convincing enough for you, you could wait 1 hour, 1 candle more, but sometimes the market will just take off. So if you are aggressive with your entry, you have options, your stop loss all the way above the head, maybe a little bit too conservative, or you can be a little bit more aggressive, put it above the right shoulder, not right at the right shoulder, because it's very clear where the right shoulder is. So you can have some protection here, move your stop loss away. And then for targets, we have options. Do you go for a fix, 2 to 1, 3 to 1? Do you look left? What are your target levels? Maybe we could even target all the way down here. Probably in here is some type of supply and demand area. So probably what I would like to do is get out here well before the absolute low, or just at least see how's the market reacting around this area. And if we see that the market is bouncing, if we get there, still we have no idea if we're gonna get here, but we have to think about the trading plan in advance, and we have to know what are we gonna do in certain situations. Just it will help you a lot with your confidence. And a lot of traders, if they don't have a trading plan, if they don't have an exit plan, they're going to trade very emotional and very inconsistent. So we do want to watch what happens here at this area and also here. And if we see weakness and some bounce, maybe we want to take profits or partial profits. Otherwise, we could think about riding this trend for a long time, because we get the direction from the higher time frame. And if we see a trend change on the higher time frame, those sometimes move for a very long time. But first things first, let's see where we go. And if we do get a breakout, so you can see we're struggling around the breakout area a little bit. Okay, we seem to have a dirty retest and the market seems to be moving now. All right, let me zoom in. You can see the first demand area, supply is coming soon. Another push, very deep, but the good thing is previous support is still holding as resistance. If this structure would be violated, I would get a little concerned, but for now it's all right. And you can see we are seeing a push here. So if you have your first target here, that could have been your target. You could, for example, think about closing 50% of your position, maybe moving your stop loss to another area. And where do you move your stop loss in such cases? You could go for the highs, or we could turn on maybe the pivot point. So what I like to do is look at the weekly pivot point, which is up here. It's not helpful. The daily pivot point is currently here, the black area. So what we could do is move our stop loss to here. So I don't care if it's above break even or below break even. I want to have a stop loss that makes sense in the charts. And the pivot point does make a lot of sense. Let me double check. Yeah, here's the pivot. And let's see what happens next. You can see we have the lower bounce, we break through the next area, and then the market really fell over. So there are many ways how you can structure the trade, and I hope you learned something. This is a pattern that is really, really common, and you can see now we have a little bit of a longer consolidation. So if you have not taken full profits, those are things that are often not ideal. The longer such a consolidation takes, the less likely it is that we're going to see a resume or a continuation of the downtrend. The longer such a sideways consolidation lasts, the more likely is either we're going to drift and keep going sideways or we reverse. But long consolidations rarely lead to more downside or more trend continuations. And you can see we're breaking levels, we're breaking into new highs, and you can see that's not a good sign. So really nice trade study. And this is a pattern that actually happens quite a lot. And it's really nice to trade this top down. You can see the first one would have been a 2-to-1 reward to risk ratio. The second one here, a 3-to-1, which is decent. Next, we have a very interesting long-term channel example. And what we have is, when we zoom out, clearly the market is in an uptrend. Here it seems like we bottomed out and the market has been rallying higher, consolidation, breakout, consolidation. And now the market has been in this channel, right? We have two trend lines. They are both very nice. We have 3 touch points on the top, which is a confirmed trend line, and we have 3 touch points on the bottom side. The most important thing is that we never want to trade a channel in the center. So you always have to wait for the market to get to one of the ends to make good trading decisions or to find good trading opportunities. Trading in the middle of a channel is not recommended because in the middle, that's where you have all the barriers. And you can see we find a lot of problem zones here if we just look. So trading in the middle of a range is going to immediately cause a lot of problems for your trade. So we're just going to wait and see which area the market is going to hit first, the low side or the upside. And you can see the market seems to be making a run to the bottom side. You can see we're not coming close to the channel yet, or we are not reaching the trend line, but now. All right, so this looks like a really strong breakout, and it is a really strong breakout. However, premature breakouts or unconfirmed breakouts are very advanced techniques. So what I would recommend doing is, if you want to go short, like in the first example, wait for a retest. See if previous support is actually going to turn into resistance, and then look for a short here. You're going to run often into a failed and fake breakouts with those types of situations. And keep in mind, we are still in an overall uptrend, right? So this market seems to be more bullish than bearish. So if you want to go against the trend direction and we're going to go short, you need extra confirmation. So let's see, what is the market going to do? And do we get a complete trend reversal and change the direction? For now, you can see a little bit of a continuation, and now we're seeing bullishness. So we really want to see what is the market going to do here. And you can see this is exactly what you don't want to see, and this is exactly what's going to happen many, many times. The market gives you this beautiful breakout candle. You've probably been waiting for a long time to get out of the channel. Everybody's been talking about the channel. And then, because you have been waiting so long and you cannot be patient anymore, you jump on the short, and then 2 candles later, you wish you had waited as you should have. And now it looks like a really strong buying signal. Those fake outs, when the market gets out of the channel and then within just 2 candles back inside the channel, that's a very, very strong fake out signal. So at this point, I would resume my bias to long. I really would like to go long at this point because we are in an uptrend, we have seen a fake out, and we're seeing huge buying into the market. So what you could do at this point is go to the lower time frame again and look for anything that really can help us. Look for patterns, look for any breakouts, pullback scenarios, look for levels. And when we look for a level, this one I think stands out right away. It's below the 129. So previous support is here on the resistance, and the market is currently trading into it. Also, another interesting thing is here, this push is very strong, obviously, and bullish, right? We are moving higher, no surprise and no secret. But if you see that the market has moved a lot, that makes the likelihood of a pullback very likely, or more likely, because the longer the market is going on, the higher the likelihood that we're going to see a pullback. And that's why if you see that you are looking at a strong trend wave, you never want to get in right away. You would like to wait out the next pullback and then see where's the impulsive wave starting. Getting into the trend waves is the way to go if you want to be a trend following trader. Don't chase long trending waves. There's a huge likelihood that we're going to see a pullback. And you can see the market is pulling back now. It was ranging before, but now we see the pullback. And let's see where we're pulling back into and when or if we get more bullishness. For now, not much. And now you can see we are probably here having this consolidation and the breakout. So now let's think about trading plans. Trading plan 1, again, breakout. Trading plan 2, break and retest. Those are usually the options that you have in those situations, especially if you have such a nice level like the blue zone here. And you can see what we're doing. We're pulling back further and further. And that's why you need to have a trading plan. You never want to get in just because your higher time frame looks a little bit more bullish than bearish. You always want to make sure that you are clearing structures, that you're clearing levels. So now we are in a very, very nice long sideways phase. And we are almost breaking out, but we really want to see that you are closing above this level. This level is quite strong and it continues to be strong. So we really want to see that we are closing above it. The close is here really the key. And if you have been using pending orders for breakouts, let me know in the comments, how this is working. My guess is probably not so much, not so well. Even though you might be able to get a better reward to risk ratio sometimes, pending breakouts are usually a losing strategy. So let's see. Do we get it? Yes, we do have the higher lows. We have the breakout. You can see we keep making higher lows. We are finally able to get above this level. So at this point, you could think about the breakout entry and you could go long, or you could just wait for the pullback, which would be my preferred way. We could turn on maybe the weekly pivot. You can see it's up down here, not helpful. The daily pivot is down here. So we could just move our stop loss below the daily pivot, which is a good level as a target. And then looking left, we have options for targets. We could be very optimistic and target the upper trend line, for example. So we want to definitely have our target before the trend line is hit and not be too brave initially. We could still try to trade. If we see there's a lot of bullishness coming into the market, we could evaluate and see, are we getting in here? And if we get here, or when we get here, do we see signs of weakness coming into the market, or is the market still strong? But first things first, is the breakout succeeding? But we now have a good trading plan ready, right? So let's see. Of course, that's ideal. And if you're a pullback trader, that's also not bad, because as a pullback trader, this is probably exactly where you want to get in. You can see some weakness. And we are struggling. So now we are in this box, a post-breakout box, not super uncommon. And we need this momentum. If we get above this, it's going to look really bullish. If we don't get above this and we make a triple top, I would maybe consider taking partial profits. A triple top is not ideal. It's quite a strong bearish signal, but we are getting above the level, which is now a big confidence boost. We are retesting the level with a lot of bearish force. And you can see it's a struggle, but let me speed it up and let's see. Okay, this looks quite all right. And now it's going to be interesting because we're moving into the trend line. A lot of traders will be aware of the trend line. And the more obvious something like that is, like the level, the trend line, the channel, the more people are probably going to think the same and going to think about, if we see weakness, I will take profits. And then it's a chicken game. Who's going to chicken out first? And then once you see that the first traders are taking profits, and that leads to weakness, more and more traders are going to take profits. So sometimes this can lead to a very quick turnaround at those areas because they're just so obvious. But for now, the market is turning around. We have this quadruple top, which is not super good for a bull, but it's not very bearish. So at this point, what you could do is move your stop loss from here to below this area. And you could still lock in some nice amount of profits, something like a 2.3 R, which is really good. But let's see if we can get more out of this. And we're trading sideways. And let's see. Hovering over. And all right. So now we're at our trend line channel level. And at this point, it's get really interesting. What's going to happen here? For now, we have bullishness. But you can see the next candle. Is it a retest? Yes or no? Let's see. If you are in a long trade and you've not exited your trade fully, it's definitely a place where you could think about, first of all, being more aggressive with your trade management, because at this point you have quite a lot to lose. You have 4R to lose. So we see that the market is for now able to stay above it, and as long as we are above it, it's good. You could still keep moving in your stop loss, move it from where we had it previously to maybe back below the range or back below here the trend line to lock in more profits. And then let me just speed it up, and you can see we are retesting or penetrating the level, moving higher eventually, but now it's taking a lot of time. All right, so really nice. And you can see this is obviously just a very speed up and fast forward version, but you get the idea. We go from the higher time frame to the lower time frame. We look for the signal on the higher time frame that gives us an idea. Do we want to be bulls? Do we want to be bears? And then on the lower time frame, we time it into that direction, where we would then be able to get a very tight stop loss in, a very precise stop for an optimal reward to risk ratio. Off to the next one. This is a very popular high probability pressure breakout pattern. And there are so many things that are coming together here. First of all, when we zoom out, obviously we are in a uptrend. The market has been moving higher for a long time, and now we have a resistance level here, and we have here our trend line to the bottom. The trend line is sloping up, which is really interesting because a trend line that is sloping up means that the lows are coming up. The lows and the low, this low and this low. And every low is higher than the previous one, which tells us that there are more buyers than sellers, because every time the price declines and moves lower, you see that buyers are coming in and buying this up sooner and sooner. So this gives us an idea that there are a lot more buyers than bears, and we have so far not a lot of signs of profit taking. So this is a very clear and straightforward pattern. If you see something like that, the only thing that you need to do is the hardest thing in trading, which is wait. And we really want to wait for the market to clear the highs. We want to see the market get above the highs here. And we have this precise level here that we can use. There's no question those are the two highs that the market has put in, and we need to get above them. We never want to trade inside a pattern. And you can see here we have it, very strong breakout. All the pressure that has been building is released now. And at this point, those patterns, they do have sometimes a pullback, but those pressure patterns, they often don't have them. So the likelihood of seeing a pullback is not as high as just seeing a straight continuation. So those things are trickier to trade. I would not even be interested in going to the lower time frame. I would even think about trading this right on this time frame and just getting in long on this one. You will probably be able to, or you're probably forced to turn this into a swing trade since we're on the higher time frame. So you're probably going to end up holding this for a long time. Let's just zoom out and see, do we have any interesting levels? Yes, we have one high here that I'm going to draw in. Then we have one high that is here, probably a very strong supply. Then we have a high cluster here. And then here the ultimate high. So as a swing trader on the higher time frame, look for important key turning points. And those are all very key turning points, right? This level here caused this huge rally to turn around. This is the origin for this downtrend. Here we had a lot of struggle and then started the downtrend as well. And this is an ultimate top. So it's important to have those on your charts and then really carefully observe the price at each level. So it's hard to say where's going to be our ultimate target. We're just going to take it from one level to the next. Ideally, you would like to see the market get into this at least, because that's a 2 to 2.5. You can see the first level here is only a 0.7 reward to risk ratio because the breakout is very strong. This is a small target. So ideally, we at least have a move into this level here for a good enough reward to risk ratio. So I would not bother so much about this level here, and I would really focus on getting to the next one. So you can see no pullback yet. And all of this pressure that has been building here, you can see where did we move into the pattern? Maybe here, 24th November in 21. And then the breakout is happening on the 11th of March. So 4 months here of sideways range. So much pressure, a lot of position building going on. And then you can see we're breaking through levels and just ripping higher. We can see break and retest, second level cleared. And then you can see we are seeing the reversal. So once you get to those big levels, it's very important to manage your trade more closely. What I would recommend, if you are still in the trade here, go to a lower time frame and really tightly try to lock in your stop loss to avoid giving back too much profits. And you can see the market is turning around very strongly because there's just so much going on. A lot of traders are sitting on a lot of profits, and then the profit taking can sometimes be very significant. We're retesting this level again, and off we go to the big ultimate level. Much faster than I anticipated, but we made it there. And looking for those tight consolidations that stretch for weeks, that are very well defined, that have this component of higher lows with a trend line, they can be really interesting trading scenarios. So this is a recent gold trade that I was in at some point, and it started when I was seeing that the price was coming closer to this 168 support level. You can see when we zoom out, it's a huge level and it's really, really important. So whenever I see the market coming into those levels, I keep a very close eye on them and observe the price action very carefully. So for now, what we also can see is that the market has been in a downtrend. And the longer a downtrend has been going on, what is happening? The traders have more and more profits. And what happens if you have a lot of profits? You're gonna think carefully about exiting your trade, and you are very worried about probably giving back profits. So a small sign of weakness is often enough to scare out a lot of those short traders and then lead to a reversal, especially if there is a level like that. This is just a prime target here. It doesn't get more obvious, and a lot of traders are going to use this level for their take profit. So you can be quite sure, especially in a long downtrend, to see some reaction here. So let's see what the market is doing. And we have here our bullish candle, and this is not just a bullish candle, but it's an engulfing candle. So at this point, I would be really interested to buy, but I'm not going to buy just here without any other context. I want to get to the lower time frame to really time my trade perfectly. And what we see here is we have a few levels. We have this one here. We have this level here. The overshooting here is okay. This looks like a news-driven spike, so I don't care so much about the violation. It's still a good enough level. So I'm going to extend this forward here. Just consult the pivot. You can see the weekly pivot. I turned it on. Weekly traditional pivot point is here. So really great confluence. And we are above the pivot kind of, but we are below this area. So what I would try to do is maybe look for a break and retest at these areas. So let's see, we're on the lower time frame. We're struggling with the level, and this is great. I don't want to see the immediate breakout. I would rather see that the market is paying attention to this level one more time. Just it validates the level one more time here, this big zone, and it tells me that you are looking at a valid zone. You have drawn the zone correctly. And if we get a breakout above this, this is a way more meaningful signal, because in the past the market was not able to get above this. But if we get above this, something significant has changed behind the scenes. More buyers, less sellers. Let's see what we have. Maybe early signs of a lower bounce, right? We can see the market is building pressure, not able to move lower a lot. That's a good bullish signal. Not enough yet. We are seeing momentum. Is this a breakout candle? Yes, it is. So aggressive traders could think about getting into the breakout. Pullback traders will, as always, have to wait. Stop loss. Well, this low is really offering itself, so you could put your stop loss below that. And then target-wise, where do you go? You could, for targets, you could look for support resistance. You could turn on the supply and demand indicator. If you want to get that, there's a link in the description. It's an affiliate product. So here's a big supply level. You could think about your target here, but you could also think about previous support resistance. Probably there's something in here as well. So we have options for a target. First target could be here. You could also use a Fibonacci, right? So we have Fibonacci point A, point B, but we can see we don't have a Fibonacci retracement. We don't even get to the 76, which is the 23. So Fibonaccis are not helpful because the breakout, the pullback is too shallow. So what do we get? Do we get a breakout? Do we get a pullback? And you can see we are struggling. All right, this looks like a pullback, but not fully confirmed. For now, we just see a lot of strength. We want to see some bullishness. If you are a pullback trader, you want to see at least some signs of bullishness. And I will show you what I mean. This is a good sign of bullishness. You see that you have a green candle and a push away. Maybe a little bit more bullishness would be good. Of course, I remember this trade because I was in it, so I know what happened. And you can see now we are seeing that the level seems to be holding. We see that previous resistance is turning into support. So this is a very good sign if you're a pullback trader. And a pullback trader could get in now. How would it look? Maybe an entry here. Your stop loss in this case could go below this area because we have the breakout area. A lot of confluence. Let's activate our weekly pivot, and you can see it is down here. So We could choose to put our stop loss below the pivot as well. And then we have our same target options. First target, 3.0 reward to risk ratio, the supply area here at 4.5. So let's see, and then we take it step by step and follow the market. So you can see we're coming very close, and that's why you don't want to have your stop loss right at the pivot, because it's just such an obvious stop loss tool. And you can see we're testing it. And this is really the perfect example here. Let me just fast forward to see what happens. And you can see we spike multiple times through the pivot. So at this point, you are probably taking out by the stop loss and by the spikes. However, the trade has not fully been invalidated. And you can see that all of the spikes tried to break through the pivot but were rejected. So if you're taking out, of course, sometimes you will not find a re-entry, but at this point, you can see we are seeing a lot of bullish momentum. And you can see we are able to close above the previous highs. So we had a close here and a close here in the past, right? And we are for the first time able to get above this area. So sometimes you will have to try 2-3 times, and that's why it's important to get good enough reward to risk ratio. If your reward to risk ratio is too small, then if you get in 2 or 3 times, you're not going to make money long term. So what you really want to do is to find good reward to risk ratio opportunities and make sure that your trade idea is still valid. The trade idea here at this point right now is still valid because we have so many things. We have the higher time frame, we have the pivot is holding, we have the breakout. You probably can also draw some type of trend line in here, and then we have our pattern. So you can see afterwards the market really nicely unfolded and kept moving higher. And let's just fast forward, and you can see the first level was reached, your first target have been hit, and now the market is moving back and forth. And you can see back at the second, whoops, let me pause, back at the second level for a third time, struggling a little bit, but you can see the market is still making higher lows. So here we are still making higher lows, which is a good sign. We are getting above the pivot point, which is a good sign. All of those things are still bullish. And you can see the second level is struggling as well. And very nice strategy. So the most important takeaway about this, I think, is looking for re-entry opportunities. And the most important thing about re-entry opportunities is asking, is your first trade idea still valid? Our first trade idea was a long entry after we had seen the reversal and the stoppage at the big higher time frame level. And then you can see it is still valid. We have here the failed attempt to get below the pivot. Then we have the breakout above the highs with super strong momentum. So our trade idea is still valid. Sometimes your trade idea will not be valid anymore, and then you cannot get in. But at this point, you can see we could have still ridden this trend for a second time.